Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued a second week of correction as the tech rout from the previous week continued to weigh on the markets. The holiday shortened week started out really strongly on the downside after Tesla didn't make it into the S&P 500. And then investors just simply dumped the stock as Tuesday saw Tesla down 90 points, some 21%. Really was a very, very huge decline for that stock. The exclusion seemed to come as the stock was certainly vastly overvalued, and investors saw it that way. And I think that $500 price you saw, well, you may not be seeing that again for some years. Most other techs joined in the big pullback on Tuesday, and the NASDAQ was down well over 500 points on that day. Also contributing to the decline was a weakness in the oil markets. I'll have a little bit more to say about that. After hours on Tuesday, AstraZeneca came out and they said their vaccine had seen some adverse reactions on an individual, and they put that vaccine on hold, and that also disturbed the market that day. But Wednesday, the markets rebounded. It's really all about techs, as the indexes that day were up about 2 to 3%, as those tech stocks did get a bit of a lift that day. But again, the tech stocks on Thursday saw selling come in as that buying or bottom picking evaporated, and that really pushed the market down again, with many groups pushing in the direction of south. Thursday, the ECB policy statement came out, and they said there's no more need to stimulate, as it appears that their economies were stabilizing, and that really did help the markets. The euro also moved up on that news. The dollar down, the gold and silver markets moved up, but all of that quickly faded. And then on Friday, an attempt to the upside again really was not able to hold. Peloton led that as they came out with their first profit ever on the stock, as a huge amount of buying from the stay-at-home environment we're in really pushed their sales strongly to the upside. So that lifted the stock up, and we saw Tesla and other tech stocks moving again, attempting the upside, but then they really couldn't hold that. Now the stay-at-home stocks, if you look at those, stay-at-home or work-at-home, that category, most of them collapsed. We did a couple of videos on that and really warned, and so many of those hit our targets. Peloton is one of the few that's up near the highs, and I got to tell you, I think it's a sell up at that level. Our list of over 20 that we had given in there were some that had massive declines. If you look at a stock like a Wingstop, or you look at some of the other ones that were in there, Shopify, there were just a ton of them, DocuSign, Everbridge, those stocks had huge declines to the downside, some as big as 30 or 40%. So you should really watch that video that we posted up there. It's even up on YouTube, and you get a good sense for where we came up with that analysis. So we think that group that's gotten killed, they might try to rally again, but overall, the stay-at-home, the work-at-home stocks that benefited, well, they're now investors in there are starting to look past the coronavirus environment, and now that might bring us into some rotation. I've got more to say about that, of course. The stock market, we think, is entering now a time of uncertainty. The techs, I think, peaked, and some prices that we've seen in those we will not see maybe for years again. But the rotation, I think, that we're going to be in can really hold things together for a while. Please do watch the big picture analysis on the stock market that we posted in our site for level 2, 3, and 4 members. We put that up on Thursday. You will be fascinated. I did research that looks back 100 years and patterns that show that the next 1.5 to 2.5 years could be a lot of trouble for our stock market. The next 4 to 6 weeks, however, as we look just as the shorter intermediate term, could be okay. We talked about the decline into early September and then another attempt to the upside. So we kind of think we're going to be rotational, range bound during the near term in here. And as we move towards the election, I think investors are going to be far less brave and far more selective about the market that they look at and the type of stocks that they want to buy. We'll be looking at some of those groups going forward as the ones that are buyable, so do pay attention. Again, we post those for our premium members. Then after we think we get past this 4 to 6 week period, trouble looms for the market. Again, watch that video we posted on Thursday, big picture analysis on the stock market. Once you watch that, you'll get the idea that it's really time to look very hard at your equity exposure. For the week, the stock market moves down again. S&P 500 and the Dow down over 2%. The NASDAQ, the big loser, down about, a little over 4% right now. The Russell also down near 2% for the market. So it was another pretty good downside move. Bond market, which caught a flight to safety bid, and we don't think it really will hold, moved up 30 years up about a point. 10-year yields moved down about 5 basis points, and they're at 0.67, we think going to 1%. So that gives you an idea of what we think about the bond market. Gold market was really a narrow chop, finishing the week up around $15 for the week. Silver unchanged, a little bit weaker in there. And we think that the next short-term period, just the next week or so, has some risk coming up, and there may be a shakeout in this metals market. We talked about that last week, warned our investors about that in our Future Speak show on Wednesday, and we're going to talk a little bit more about that for the gold market in our short-term view a little bit later in the show. Dollar gains 3%, 0.3%. Wow, that's really not much. And we think it might have a little bit more over the next coming week for the dollar, but not much. Again, we'll talk about that a little later in the show too. Oil moves down, and that Tuesday big decline. So oil down over $2. Tuesday saw a 7% drop intraday in the oil market. News comes out, demand really slow. The Saudis cut prices in there as their exports fall to three-decade lows in there. So they have to cut prices to be competitive because they really need the money on their large amount of debt. And there is talk again, and you remember what happened last spring. It was a March contract fell to minus $40. Well, there's talk again of the of oil looking for a place to go and some backup as far as it floating out there in the storage and ships out on the ocean. So once you get that kind of talk, there's a lot of risk. We think there is risk in the oil market in the very, very near term, and you will see a little bit more about that again as we get into our short-term view for the coming week. I want you to go to the AskSlim site, explore the site. We have so much in there for traders and investors, really of all holding periods, all styles. Subscribe to our YouTube channel. Click that notification bell if you want to get our videos that we put up on there. We do little clips of things that we put up on there, especially on the weekend, and you get a lot of great information. And make sure that you like this video and all of our videos, because that does help us. And if you don't like it, make sure you tell us why. Twitter, if you're a user of Twitter, follow us on AskSlim. And for information, and I'll show you more things that are coming up about our website, about our memberships, you can write to our COO, Matt, at AskSlim.com. Really a great analyst also, and he does a tremendous amount for our website. You can write to Matt at AskSlim.com for more information. And I've got some great things to show you as we move forward. So one of our indicators that we developed is the Slim Ribbon. Now we make that free for people on our site for those that use Thinkorswim. Now we're expanding that right now, and this momentum indicator is now available on TradingView.com. I really want you to go to that TradingView charting site, and you will see it's just a fantastic site with some of the best indicators out there. And now the Slim Ribbon is available on TradingView.com. This, in my opinion, is one of the best momentum indicators you will ever use to keep you on the right side of the market, really understand the conditions of everything that you look at. I'm going to give you a little peek at that right now. This is the TradingView charting site right here. What I'm showing you right here is a TradingView chart on light crude, just so you can get an idea on this. And I happen to have our focus list in here visible that we look at. Again, that's linked to the chart, so you could just click on them. So what do we look at here? We're looking at the Slim Ribbon. You could see what was pointing down in here. This is made up of 3 exponential moving averages. And when it is moving down, it also colors the volume bars red. If it goes neutral, it's going to go gray. And when it turns positive, you see that little arrow right over there as this turns positive, and you then get into this very, very strong upward move. This is how you catch the impulses in both directions. I want you to see right over here, it turns negative right there, and look at what happened as this oil market starts to turn down. Keeps you on the negative side, on the positive side, and on the negative side right over here, and look right over here as it colors these volume bars red, so you get a good idea of momentum conditions. I'm telling you, this is one of the best momentum indicators you will ever find, and now available on the TradingView website. Let's just look at a few other symbols so you get a good sense for this. Let's look at the stock market SPY, SPY. Why don't we just do that? And you can see in here, well, it was really negative as it was red during this period and the market collapsing. Turns positive right over here. You see that arrow, and stays positive through this whole period. Has a tiny little whipsaw here as we got one of our cycle lows during this time period, and then turns positive. And once it starts to expand the distance in this in the ribbon, it really starts to accelerate in the direction. Great momentum indicator. And now the S&P 500, the SPY, turning neutral when you look at that right there. Let's take a look at, let's go one more here on the indexes. There's QQQ, and you can see in here what's happened is that the NASDAQ, which turned positive right over here, that was at 203 or so on the QQQ, it was positive this entire way. There was never a time when it gave you anything other than a signal to be on the long side. You can see that. And now neutralizing. You see that little arrow right there, and these bars turning gray right over here. This is an amazing indicator for momentum. Apple, AAPL, let's just take a look at this one. Look at that right there. It turns positive right over here. Gives you this big move at this point from this was post-split, remember, $70 all the way up to $137, so almost a double. Turned neutral here in one of these little cycle lows, and then got positive again, and now has turned neutral again, and may soon turn negative when we look at that. How about Microsoft, MSFT? You can see that right there. Well, it's a same thing. Gave you that real positive momentum reading. And now, right over here, you can see that has turned neutral. And it looks like very soon it's going to turn negative. This is the Slim Ribbon on TradingView.com. Just a fantastic indicator, a great site, has unbelievable things in here on the left where I don't have the whole page showing pretty well there, but let me just move that over so that you can see a huge assortment of different studies and indicators that you can use in there. Really like that. This even has our cycle indicators in there. It's a little different when you look at this, is the cycles lay out a little bit differently. As you can see right in here, it looks different when you look at that, right, compared to how we do it on our site. You could do that, or for those of you that are cycle analysts, you can use the sine wave line also, and that gives you a good idea that you could look at cyclical patterns that way. There's just tons of stuff in here, but the Slim Ribbon is really what I wanted to show you right now. A great momentum indicator, as you can see. The Slim Ribbon available on tradingview.com, and I really would like it if you go to the site, download that. You'll say to yourself, well, how do I download that? How do I get it on there? Let's take a look right now, and you can see this little symbol right over there, which is indicators and strategies, that function symbol. If you open that up and you type in Slim Ribbon, you will see right over there, you can download the two indicators. RV, our Vice President of Business Strategy, now put this in here, Slim Ribbon and the Slim Ribbon volume bars. And you have to download both of them if you want to get them that indicator in there, and you will see you have just this fantastic tool right there at your disposal. Slim Ribbon on tradingview.com. All right, so now let's get into the next part of the show, which is the short-term view of the major markets, and we will take a look at light crude, the gold market, the dollar, the bond market, and the S&P 500. So we're going to switch now over to our charts, and we'll take a look right here at the light crude market. So remember, I showed you the light crude chart on TradingView. Here it is right now on Thinkorswim, which where normally all of our work is done. And again, you had the Slim Ribbon pointing up and all of these upward moves. Now, the Slim Ribbon is now paired, as you can see right over here, with the projection oscillator. For those of you that are investigating on TradingView, that is also available on there. And what this does is gives you confirmation to momentum. And you can see right here where the momentum turned negative. Now we start to give you these signals right over here. And once this gets up there, then it will be giving us a sell warning as it gets up to that red zone over the 75. So where are we right now? Momentum negative. Cycle pattern, well, we said that this would be moving down. What did we say for everything else? Well, we're about 80 to 85% accurate this week as we look at all of this short-term indicators. We really got the oil market correct. We got the stock market correct. We got the bond market correct. We get kind of partial credit as we look at the dollar and the gold market, as there was no early dip in dollar that we expected, and a little narrower range on gold than we expected. But it was a strong week, 80 to 85%. And here we go as this cycle points down, and here we're looking for another week on the downside. For the next 3 weeks, what we're looking for is downside and then some upside and then curling down again, actually. So there's a lot of risk as we get into this phase because the intermediate patterns are looking negative. So this cycle right over here could give you another move to the downside. So we're going to look for a test of the 35 support that's down right over here, and that should come sometime, we're going to say, in the next 4 to 7 trading sessions, and then try to get some kind of a rebound in there. But we got to say over the next 3 to 4 weeks that the sum of the evidence says is that, well, based on the intermediate patterns and this tone set by the Saudis, who have cut prices and who have their exports at 3-decade lows, and oil looking for a place to be stored again like it did in the spring, there is a lot of risk, and there is a chance to get down here to this intermediate support zone under 32 down over here. So we're looking for 35, but we just have to say that all of this looks like it could get into some kind of very hard selling and get down to that 32 level. So that is a look at the light crude market. Next thing we're going to look at in here is the gold market. So here is gold, and when you look at this, we gave a little warning over the last couple of weeks, mentioned in Future Speak also, that because the momentum market is the momentum in here, and you could see the Slim Ribbon where it just is kind of laying on itself, This is no momentum being established. And when we got into the bottom right in here in this cycle, and this more dominant cycle in here, and we started to get a sense that this weak pattern where it rallied and failed from resistance was giving us a signal that there was a chance that there's going to be a washout on the downside before we get into these more positive periods. And this is silver here, which we warned was going to weigh on the market, and it has been. So before we get into this period in mid-September up through October, which we think is really positive, we think that there's a chance there's going to be a throwaway. If it gets under 1910, it probably gets down to this support here around 1870, and that's 1870, 1875. We kind of think that the next 4 to 7 trading sessions has that risk right in here, and then after that we'll be in better shape. This would be a buy, in our opinion, for the intermediate term upward push if we got down there, and we think that there's a pretty good chance we're going to get that kind of a shakeout on the downside. Especially we think that the dollar has still another week or two that it could be firm. So we're potentially looking for that. So I know there were a lot of long holders in gold that started to hear our caution because we've gotten some emails on that. And yes, this does look to us like there is some risk right now. And then if it holds 1910, it's even better and gives you a better sense for the strength that's in there. And if it washes out under 1910, to us it doesn't really matter because we think that the next pattern or the intermediate patterns after that will be pushing up. Some of the evidence, it's going to be much better in our opinion later in late September and October. There is short-term risk now, and we think that is a buying opportunity, and especially that seems to be true based on a dollar that is firming right now just by a little bit. So momentum is just not giving you anything in there at all right now. So it's a time for a little bit of caution for short-term traders waiting for an opportunity. Okay, we're going to move on here as we look at the dollar market. Dollar sign DXY. Get that chart coming up for you here, I hope. There we go. So here is the dollar as we move in right now. Now you can see what's happened in here. We were looking for this to be where the next minor third comes in. What is a minor third? Well, for those of you that are brand new here, there are 3 of these minor thirds inside the dominant cycle. These are cycle harmonics. And what happened in here is that this cycle ran a little bit long. It shifted it to the right a little bit, and then this one ran a little bit short. So this bottom right over here came about a week earlier than we were looking for it right here. That's okay, and what we expect is that it will rally for about another week or so on the upside in here, but not make a lot of ground in here at all. We're looking for a range that we've upgraded a little bit to about 94.5 on the upside. This is 95 here. We don't think it'll make there. This is 94.45 or so right there. So we think that's kind of a best case, 94, 94.50 on the upside, and a downside around here around 92. So we think that first it's going to try to get up in here. That might shake up the metals markets a little bit for the next week and a half. And then we think that this downward motion will come back again as then this declining phase from that cycle does click in. All of this really in a big downward trend that we see in here. And some of the evidence in here is that intermediate patterns are negative. And what we see here is just modest potential upside. And then all the way through the end of the year, a lot of downside risk. And a lot of downside risk in the dollar means a lot of upside potential in the metals market. So we want to keep that in mind as we look at this. Just though for the short term, momentum in here negative, as you can see. And when the momentum is negative, the projection oscillator gives you sells. And right over here, we get a little sell pending going on and actually getting ready to turn down. So you can see how long this is holding up in here. It's kind of a little bit of firming, a little bit more time in here, and probably not much for the upside in there, but a little bit we'll look for. Now we're going to switch over again as we look at the bond market, /ZB. Here is the ZB right there, and again, you can see the minor thirds are pretty clear in there. We're not really 100% sure about this low here or this low here being the minor third right over here bottom and the dominant cycle bottom. You see it kind of falls right in between them. This could be shifting a little bit over this way, but again, that doesn't matter to us. We see the resistance in here, these cycle peaks right there, up around this area, these resistances right around 178 to 178.5 right there. We don't think it's going to get through there. Right now, we look like we're putting in a little bottom in here on this minor cycle and likely to get some kind of an upward push in here. But we're really looking only for chop in here. 174, 178 up here, 174 down over here. That looks like the range that we're going to see for a while. And then a lot of risks as this turns down here into the October period there. So we think this October period, which we just have this modest downward turn in here, really has the potential for a lot of downside. So some of the evidence is that after what we see as some short-term chop, we see that this can turn down pretty hard. We'll call the near term an attempted rally to the upside here, possibly getting up to 174. It really depends on the stock market condition. And then after that, a lot more downside risk coming into the market. We do not see any kind of an upside breakout in here. And what we really see is a downward bias in the condition of this market for the intermediate term. Some of the evidence after some chop with some potential bias to the downside always existing in here, that there could be a pretty hard sell here in the bond market with some chance at 171 in October. That would be a pretty big trade. So we'll talk more about that and that downside risk in future speak when we come into the next week. I just want to make a little bit of an announcement right now. And I will tell you that just in a second, because what's coming up pretty soon is our view of the S&P 500. Before I get into the S&P 500, I've got more to tell you, but just want to announce that next week is my vacation week, so I will not be doing any videos next week, but everything else for AskSlim continues the way it normally does. Before I show you the S&P 500, I've got some great things to show you right now. So don't speed forward. Don't go ahead. You really want to see this because I have an announcement of something that you have never seen before. Never. And maybe you've never seen it before on AskSlim. That I know for sure, but probably nowhere else either. So get ready for this. Do not go away. First thing I wanted to remind you is that what started last week was our level 3 special trial going on. What you get is a Slimulator ranking system that is our analysis on the 84 best traded symbols. You get momentum analysis, directional bias, a 3 to 6 week outlook, and a new way that we have in there that you can scan all the changes in the momentum rankings. You have to look at it to really appreciate it. Our trade ideas, these are 1 or 2 a day that we put out with the sum of the evidence analysis. It's from our huge universe of widely held stocks and ETFs and futures. There's a video on each one every single day that you can go in and watch. Avi does an amazing job at teaching you how we come up with these trade ideas. You get favorable entry ranges, target zones, reevaluation levels where these things are not going right. And of course, sometimes that happens. But if you take a look at last week, we showed you what our record is as we have just fantastic results going in all of these 270 something or 280 different ideas that we have posted recently. And you can get real notifications just by clicking on the little bell on that page, and then we'll let you know when something gets close. Or at any of the important levels. So just absolutely amazing. That is the Slimulator ranking system trade ideas. And if you sign up for the level 3 trial, you can do it for 1 or 3 months. You also get our stock index report live stream. I've got more to show you. That's the exciting thing I'm going to show you coming up. You don't need any special platform for that. You also get our stock index report. That's a daily report that we put out. Weekly stock index report for a little bit longer term perspectives. Huge amount of info on there. Our weekly ETF review and the Slimulator Momentum Tracker, where you could, for investors or position traders, you get a longer term perspective on that. Over 1,000 symbols for investors. And again, you'll see our built-in algorithms on that. There's so much on there I can't even tell you about it. Plus, over 500 videos available to you in our library that I have created in 9 categories. You will learn so much about so many different things. All of that in our special trial for 1 month, just $49.50. Just absolutely amazing for 1 month, and even save more by taking our 3-month special. Write to Matt at AskSlim.com, MATT at AskSlim.com, and tell him that you want our special trial. Let him know if you're interested in 1 month or 3 months, or he'll probably send you both links anyway. So just an amazing opportunity for you. And look what is coming. This is amazing. AskSlim live chart streams coming soon. We are working on this, and I'm going to show you our beta version right now so you get an amazing sense of the kind of things that we are bringing you. All we want is for you to be the best trader you can be. Your success is our success. So we work so hard all of the time to bring you the absolute best studies, indicators, education that we can probably bring you. And in this case, you're going to get our studies, our indicators on the favorite study pairings that we have, and so much around all of the short-term indicators that we have. Well, for short-term traders, day traders, you're going to utilize our suite of momentum indicators in multiple time frames to support your trade planning in terms of your directional bias, your entries and exits. And this is going to be on the indexes, the major tech stocks, the metals, the oils, the S&P 500, NASDAQ, Russell, S&P, the SPY, QQQ, IWM, gold, silver, oil, plus a lot of stocks that we'll put up based on user polls. How do we do that? We have developed a way to live stream all of our important things right to you, and you'll be able to put up all of these channels. What is that? What am I talking about? Well, coming soon. Live stream, our live chart streams. This is brand new. So this is just a beta page that I'm showing you right now so you can get an idea of what this is. And you can see in here, I happen to have 4 of our live streams available right now. What is that? Well, look, all I do is click on here, and it's going to open up one of the channels for you to see, and all you do is click this arrow, and this is live right now, coming right out of the AskSlim website, where I'm showing you the live 15-minute and 3-minute chart on the QQQ. This is running live right now, and you can imagine what this would be like when we have a lot of these channels available to you with that analysis. This one happens to have the reversal scout on it, and also has the slim ribbon, also has the stochastics momentum indicator. We'll be mixing this up, the projection oscillator, and you'll be able to really tell when something is in a positive mode, when something is in a negative mode, and where your entries and exits should be for short-term traders. So that's just a look at the QQQ. Just going to show you some other examples. Here is the amazing 2-hour charts that we give. Again, these are live right now, as you can see. The market on its lowest for the day, as you can see in there, and this is showing you the our market condition indicator. When I highlight it, it happens to darken out right there, so I'm going to have a little trouble showing it to you right now. But this again has a reversal scout on there, the slim ribbon, our buy and sell areas on the projection oscillator on these 2-hour charts. So you get a good feel how to create biases in there. Let me just show you a few more. Here's the gold, silver, oil futures right there. Again, as we look at this on 2-hour charts, I'm just going to start this stream up, and this again is one of the channels we'll be running, and you'll be able to get all of these fantastic things to be able to help you with your trading decisions. That's looking at silver and gold and light crude on 2-hour charts And let me just pop up this Apple right over here, as you can see, and we'll get this Apple Live coming up for you right there that also has 15-minute chart and 3-minute chart. These are just examples of things that we can bring you. Could it be any clearer to you how the 15-minute chart is in a downtrend? And then when you get into sell areas as the stochastic momentum hits you right here and 10 turns down, that gives you a sell. Same thing for the projection oscillators. All of that very, very clear. We'll teach you a whole lot more about this, but you'll be able to get all of that live. This is coming to you very soon as we are creating our own way, our own production studio to be able to bring you a multitude of channels coming off of the things that we offer. It'll go way beyond the charts. Also, we have a lot of other things in mind as we develop this. Nobody else has this. So we bring you our analysis, and this will be available for level 3 and 4 members only. So watch for more information on this as we bring it to you. AskSlim Live chart streams coming to you soon. Just an amazing piece of development that my amazing team is working on. All for you, so you can be better. Remember, your success is our success. And now we move over to the short-term view for the stock market. I hope you found that immensely interesting. If you didn't, then you're just tuning in now for the S&P 500. Do go back and watch the amazing things we brought you in this whole show of Market Week. All right, so now we're going to get to the stock market here as we switch over. I still have the bond market up here, but we'll go to SPX. So we show this a little differently now, and I presented this over the last couple of weeks. And first thing I want to show you again, the slim ribbon right over here. Here's where it turned positive right over there. It gave you this enormous rally as you moved up from this point from around 31.40 all the way up here to about 35.88.11. Not about, but exactly. And here you can see all the buys coming in right there. The only thing is that this now has turned neutral. So this green now will go away, and then we'll be waiting to see whether it resumes or whether this does turn red. So we have neutral momentum in here for the first time here all the way back since June. So we have July, August, part of September staying positive the whole way, and then turning into this neutral momentum right now. That is illustrated right over here in these notes. You see when this structure was built here for the last cycle, we were in a positive bias and a positive cycle structure. Now we are in a neutral bias that we look at here in these time frames, and the cycle structure is neutral. This middle one right over here really sets you up to a top half and a bottom half channels, which gives you the sense for if it gets up into the top half, it's a little stronger. If it only trades down in the bottom half, it's definitely weaker. And it's a neutral structure, so it basically points overall sideways without pointing to a higher high during this time frame right over here. Now we don't see the cycle anchor point is not confirmed right over here, and you know what I believe is that we could still get a throwaway here for a day or two, and then we'll have the anchor point set, and then these will all change right in there. But I want to put it in here for today so you get a sense for what this looks like. A bottoming right in here. Here's your Apple that's getting sold off right today. Looking for a bottom. It's trading near 110 right now. And then turning up, of course, were that to happen, it would help the stock market when that happens. And you can see that what we're looking for in here over the next couple of weeks is maybe one little finish in here to the downside, and then getting into some rally, which gets you into this declining resistant sell zone and then turning down again. If the market happens to do something unusual, and that would be create a low in here, get a rally, and then break the low in this next time frame, in this next cycle here, and it does it early below whatever the cycle low is in here, you can see right over here that cycle low. I'm just going to move that because since I put it in, it's now getting down to that last cycle low right there. And when you see the cycle starts right over here, and now we're exactly the same level. This is neutral. If this breaks this, there's a potential we would be lowering these, of course. And what this is setting up for what we think would be a failed rally over these next several weeks. So what we're going to look for in here is stock market finding a bottom, then getting a rally and finding itself in some sort of a modest couple of week upside. Right now, this is pointing for about 34.28 to 34.60. But these prices are getting lower, so these are going to decline a little bit. And then after a week to 2 weeks of attempts on the upside, then the risk starts to pick up again out over here. We have the cycle structure in here is more negative in the NASDAQ and a little more positive in the Russell. But overall, they look pretty much the same. And you can see this declining phase right over here aligns with the intermediate declining phase that we have showed you for a long time that takes you into the early part of September. And that all really is we're getting ready to bottom in here. So we think if they throw them away for a day or two, they'll be moving up again. But these prices right now are falling by a little bit. So we're going to project up to about 34.20 over the next couple of weeks in a rebound that would be about 100 points off of this low. And if this gets lower, we're just going to lower it by that same amount in there. So we'll be updating that for our members, of course. So a little bit of a rally starting in the next week, beginning and getting up for maybe a couple of weeks, and then not able to get through this resistance area is what we see. This is the upside were it to become very, very positive. We think this is a lower probability in there, and that the highest probability will make a low and it will track up in the bottom channel that you see right over here. That's what we think is the highest probability. This is cycle analysis. For those of you that are watching it for the first time, we're looking at this cycle right over here as the dominant cycle. This is the minor cycle right in there. You can see the minor cycle low that came here in this very, very strong cycle that occurred there. And now a much more normal pattern as you had this pretty good break over there, and we think we're going to start to get into these more normal patterns with the upside that you see in this upward movement right in here now giving way to this neutral momentum that we see right in here. And, you know, if it sells off real hard, this momentum could go negative, but it's kind of late and we don't think that's going to happen. So some of the evidence that we see, intermediate patterns should be bottoming pretty soon in the next days. The intermediate NASDAQ is topped. So we have a battle going on as we have the S&P 500 likely to do better than the NASDAQ. And that really makes for the next 4 to 6 weeks, in our opinion, this rally, this sell-off, and the next rally as we start to move out towards the election time. We see that as kind of a choppy time period in there. The Apple bottom coming in there is likely to lead a tech into a rebound, but we think that will fail. And that the big picture that we see in the stock market, I think you really need to watch. What we put it out Thursday, as I said earlier in the show. It really, really gives you a great sense for how this stock market can be in a battle phase right now, where the techs try to rally and fail. They find other things to rotate into in value. They consider value, and this just choppy time that we think we're going to see in here, right over here, and extending out into this October period. And then we think come into late October or even into November, December, it could be a lot more risky. But you got to watch our Future Speak show on Wednesday. Thursday was our big picture analysis on the stock market. That's all for level 2, 3, and 4 members. If you do take our trials, which we talked about, you can then have access to all of that plus everything else we showed. And don't miss that announcement that we put out on the coming AskSlim live chart streams that you think you've seen things that are fantastic. Well, this is just amazing. That is the S&P 500, the stock market, as we look for it to grope for a bottom over these next couple days and then get into this rally phase. That is everything for the show that we're going to show you today. I hope you found it incredibly informative. Please do become an AskSlim member. Even if you just want to be a free member, you can click on there, and we'll give you a little preview to some things also. So we do want you to take advantage of all of the fantastic information that our just really amazing, high quality, well educated, and incredibly talented team brings to you every single day. That is the AskSlim Market Week show for this week. I want you to be incredibly careful. It is so crazy out there. And I'm always wishing you great trading.